The week started on a mixed note as technology stocks in the US recovered ahead of important Magnificent Seven earnings this week, and oil slipped ahead of the next OPEC decision that is due later this week. So eyes are on Microsoft earnings due today after the closing bell, the Bank of Japan, and the Federal Reserve decisions. So welcome. This is Swissquote's Daily Market Talk. So as I was saying, the week kicked off on a mixed note yesterday. Equities in Europe fell. The major US indices were near flat, well, slightly positive for the S&P 500 and for Nasdaq 100, and slightly negative for the Dow Jones Industrial Index as technology stocks in the US extended a rebound into a second trading day, while oil stocks in the US retreated on a further sell-off in US crude. So US crude fell another 1% at yesterday's trading session and is testing the $76 support to the downside this morning, while Brent crude extends losses below the $80 per barrel important psychological level on quite desperation regarding the hard to revive Chinese growth and also on ample American supplies. The thing is, well, a decision from OPEC that is due later this week to delay unwinding their supply restriction measures could eventually limit losses in crude oil, as the cartel has no interest whatsoever in letting the price of a barrel sink further below the $80 per barrel level. Because Saudi Arabia, for example, needs oil prices to be at least around $70 to $80 per barrel range to balance its budget. Therefore, I would actually be more surprised than not to find out that they will actually keep their plan to unwind their production cuts next quarter. But we will see that, so the expectation that they will not do anything, combined with the almost oversold conditions in crude oil, suggests that, well, the current levels in crude oil could be interesting dip buying levels for those traders who actually bet that oil prices shouldn't dive below the $75 per barrel level for the US crude and $78 per barrel level for Brent crude, respectively. Elsewhere, as I said before, well, the week started on a positive note for the US big technology stocks. In this context, Roundhill's Magnificent 7 ETF recovered another 1% yesterday. Tesla was the major boost among the 7 as the stock price jumped more than 5% just yesterday thanks to a bullish call from Morgan Stanley. But note that an analyst at Truist Securities apparently tested Model Y's full self-driving system recently and got this close to having an accident in that car, where the car that he was sitting in accelerated through an intersection as the car in front of his car had only partly completed a right turn. So this analyst wrote that an accident was certain had he not intervened in that Model Y car. So the analyst was still impressed by what Tesla could do in terms of full self-driving and kept his rating and his price target unchanged at $215 per share, which is slightly lower than near $230 a share at yesterday's close. But the letter added to the worries that the much-awaited robo-taxis from Tesla will be, well, incomplete at October reveal, if it's revealed in October, of course. So I would still be careful with Tesla stock as the cash cow of the company, which are the EV sales, are waning in favor of the competition and the margins are, well, squeezed. In sunnier news, ON Semiconductor jumped 10% at yesterday's trading session after reporting better than expected second quarter revenue and earnings. And remember that TSM in Taiwan also revealed strong earnings in the second quarter of this year, meaning that the second quarter performance of chip companies around the world are looking good. Alas, ON may find it hard to clear a major Fibonacci resistance, which is the $80 per share level, which will allow it to return to the bullish consolidation zone at a time of rising worries and rising questions about whether AI investments will turn out to be as promising as people first thought they would be for these companies that actually heavily invested in these technologies. Now, I know that some of you think that they are not, and well, you are not alone, because Nvidia retreated 1.30% at yesterday's trading session, which was, well, otherwise not too bad for the big technology companies. Even Apple closed slightly higher, slightly in the positive yesterday, despite revealing that their AI models will actually miss the next product release, but they will come soon after that. Let's see what Apple does with its AI and its product sales with AI. But anyway, Microsoft will reveal its second quarter earnings today after the closing bell, and its data center growth will be largely in focus of investors, obviously, and may meet and even beat their expectations as big technology companies like Meta and Google continue to spend big on AI tools. But I'm no longer so sure that strong results will spark the same enthusiasm that we saw in the previous quarters, unless we start seeing companies like Facebook and Google will start saying how AI impact their revenues positively. But it might be quite premature. So for me, Meta's announcements might give us more insight about where the AI really is standing and where it is going than Microsoft's, and Meta's results are due tomorrow. In non-technology, McDonald's saw its share price jump almost 4% yesterday, but the company announced that its sales fell for the first time since the end of 2020. The profit fell 12% as well, and the company's CEO said that while the value deals, which are like low price deals, start resonate among low-income groups, which may explain why the stock price at McDonald's jumped after weak results announcement, but one or two value items on the menu won't be enough to bring masses back to its restaurants. But McDonald's results are obviously another example, along with what the airlines say, for example, that consumers in the US and around the world are now seriously pushing back against rising prices, and that points at taming inflationary pressures. Now, finally, one place where McDonald's saw its business do well was Japan last quarter, given a significant foreign tourist rush to the country on weak Japanese yen, as the dollar yen hit a 38-year high back in July, remember. Now, nowadays, the Japanese yen is better a bit on expectation that the Bank of Japan will start normalizing its monetary policy. And I'm really sorry that there was a mistake at yesterday's Market Talk episode, as I said that the BOJ would announce quantitative tightening and even lower its interest rates. I was obviously meaning that they will hike their interest rates and not lower them. But I guess I'm more trained to say lower rates at this period of the year than hike interest rates, as everyone else, every other major central bank out there are lowering or preparing to lower their own rates. So I don't know if the BOJ will do what is expected to do this week, which means higher rates and QT to give it further support to the yen. But the Fed decision that's due tomorrow will certainly trigger no fireworks, as Jerome Powell will likely hint at an upcoming rate cut in the US at its September meeting. Now, the US dollar index is on the rise before Wednesday's Federal Reserve decision and a series of jobs data. There will fall one after the other throughout this week, with the JOLTS job opening data due later today. Now, note that the US jobs data becomes more influent recently, as the Federal Reserve also starts increasing its own focus on the health of the US jobs market for making its decisions along with the inflation data. Now, elsewhere, the euro-dollar sank below its 200-day moving average yesterday ahead of a series of inflation, sentiment, and growth data from the Eurozone countries, while pound traders' hearts are apparently pounding toward the bearish side, with a slightly higher expectation that the Bank of England could actually announce an interest rate cut as early as this Thursday. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.